Hey folks, Dan Bird here with the Daily Scan for October the 9th, Thursday. Let's take a look at what's going on. A little bit weak today, interestingly. Are we going to have another red day? We'll find out here in a second. As always, I'm not a financial advisor, so this is for educational purposes only. Just another reminder that I will be doing a Zoom call for all subscribers on Saturday at 2 p.m. Eastern Time. It is an open forum, live. So any questions, we'll discuss the market, we'll discuss charts and stocks, and I'll open it up to any questions that anybody wants to ask. And we'll cover as much as we can on Saturday. So if you come to the main page, to the home page, you just click on this button right here on Saturday. And right down here is the link for the Zoom call. So you don't click on it now, but wait till Saturday. 2 p.m. Hope to see everybody there. Okay, let's take a look at the charts and see what's going on. I've got a couple of things I want to show today. A couple of good questions came in yesterday from the YouTube channel. So let's take a look at the 10-minute charts. First off, you can see just right from the open, continue to sell off right till about 10:30. As I've said many times, the first hour is full of volatility. A lot of times, professional traders will fade the first hour, meaning they will take the opposite side, whatever that first hour is doing. So it looks like we're starting to head back, but sitting right at the moving average, and money flow is down. Technology still is up there. Discretionary and communications, though, are continuing to roll over. So technology again today is carrying the market higher. The defensive area, they're starting to perk up a little bit. Staples, utilities, and real estate moving a little bit higher. The cyclicals, financials is down. Healthcare, which has been just on a tear lately in the last week or so, pretty much flat right now. Industrial's down big time today. Materials are down and energy is down. So again, technology is what's trying to keep the market up. We'll see if it can do that into the close today. Here's growth. Here are the rotation charts. Growth versus value actually looks pretty good. So overall, this is just a little blip, perhaps, in a very, very bullish market. Discretionary continues to weaken against staples. So this is an indication of rotation out of those aggressive areas and into defensive areas, out of discretionary things that we would like to buy, like new cars and vacations, and things that we have to buy, like toothpaste and deodorant. And technology, again, going a little bit higher. Semiconductors trying kind of flat, and transports are flat today as well. Breath is decidedly going lower. Interesting. I'm going to look at this here in a second as well. Breath is rolling over today for sure. Even though we're not really down a lot on the S&P, the percentage of stocks that are above their 20 and 50 and 200 are all starting to roll over, and the bullish percent index is down too. The Russell small and mid caps looks pretty much the same as the S&P. Sell off in the morning, trying to make a comeback now. It's by the way, it's 11:05 a.m. on the East Coast. So compared to the S&P, the Russell is pretty much flat. Mid caps and small caps are actually lower or underperforming the S&P right now. So let's look at the breadth for those. They look the same, 20 and 50 and 200, starting to go lower. The mid caps are sitting right on the 21-day moving average. The small caps are actually a little below the 21, and the breadth on those are heading lower as well. The NASDAQ 100 looks the same, sell-off, now starting to try to come back, but advancers and decliners are definitely below zero. So there are more decliners than there are advancers, which makes sense for the sell-off right here in the beginning, but as we try to recover, that is not really moving much higher. Neither is volume. So it's not getting a lot of support for this little bit of a rally. That rally may not hold. It may actually start to roll over. And the VIX is starting to move higher now as well. So we'll see. I mean, this is not again, not concerning. There's the 21-day. That would be a healthy pullback if we came back to there. And again, for the NASDAQ 100, breadth actually looks a little bit better, not below its moving average or the 50% line at this point. All right, next thing I want to look at on the charts page for subscribers, on the left-hand column down here near the bottom is bullish percent index. Let's look at this for the S&P and for the NASDAQ. So for the S&P, what the bullish percent index is, it's related to PNF charts, which I haven't really covered. I don't use PNF charts, so I'd have to do some research and put together a training on that if I did a technical Tuesday on PNF. But PNF basically tells you whether it is in a bullish or a bearish configuration, what percentage of those stocks. And right now, so the bullish percent index tells you what percentage are in bullish configurations. If it's above 50, you can see right here, if it's above 50, then there are more bullish than there are bearish. And it certainly is right now. However, what you can see back here is it got near the highs right here as the S&P was going higher. And then as the S&P continued to go higher, the percentage of stocks in bullish configurations actually came down. It's now consolidating sideways in this symmetrical triangle. So it's going to be important to watch this to see which way it breaks. If it breaks through the bottom of this and breaks through the 50% level, then we are definitely starting a downtrend. Let's take a look at the NASDAQ 100. NASDAQ 100 back here. For the bullish percent index, same thing. Looks a little better though. NASDAQ 100, again, above 50. It did go below 50 slightly. But again, it was at its peak right here as the market was starting to recover off of the April lows. You can see right here how extreme it got. This is an indication of a potential reversal, how extreme it got right at the lows. So that's one of the things that we will look at if the market ever sells off again. I have a whole set of charts for finding bottoms, and this is one of the indications right there. It's better at finding bottoms than it is at finding tops, because tops can last for quite a while. And as you can see, the market just continues to go higher, even though the percentage of stocks in bullish configurations is coming down. Now, right now, it's sitting today right on that trend line. So it's going to be important to see if it breaks through that. And then, of course, the next level and most important level is the 50% level. So we'll continue to keep an eye on that. It looks interesting right now. Let's take a look up here at the volatility, just out of curiosity to see what this is looking like as the S&P is going up. This is the 3-month versus 1-month volatility. You can see that it is the relationship between those two is declining, which means that the 1-month volatility is outperforming. So then the closer in volatility is moving higher than the further out volatility. And right down here, you can see the moving average lines. They have not yet crossed, but they are moving up. So volatility is slowly starting to creep up, even as the market continues to rise. This is something we need to keep an eye on. And the VIX is not yet above. Actually, we can see it back here on these charts. You can see the VIX on here. Not that one. Oops, I thought I had the VIX on here, but I don't. All right, so let's go take a look at the VIX, because you'll see that it has been creeping up slowly. There it is, not yet above 17. So a couple of times it tried to poke its head above 17. It actually closed above it 2 days ago, but yesterday was lower. Today it's a little higher than yesterday, but still below 17. So again, this is not a big concern. The 21-day would be a healthy pullback. The 10-day moving average of the put call ratio is very low. So that is at an extreme. That means there are lots of complacency. Lots of people are very bullish. Everyone's buying calls. That's what pushes us down. So this is the time when reversals sometimes can happen. So we'll have to keep an eye on that. And then the 10-year again is just kind of trading sideways right now. All right, so let's take a look at, there was a question, two questions. One was on Costco, and I'm going to cover it in the second question. The second question is, I want to find a way to see the breakouts before the breakouts happen. And while it may seem impossible, it's not actually impossible to do that. I'm going to show you a way to do it. So the first thing I want to do is let's go here and look at a couple of recent breakouts. One of course, oops, they're not actually on that one. Let's do it this way. Let's look at AMD, which is, everyone saw that breakout. There's the breakout right there. But notice the 21, notice where it crossed the 21 moving average down here. And the ADX lines crossed right here. So this would hit the scan. This would hit my scan right there. And you might say, well, gee, that's not really very much. It kind of went above it back here too. And that's true. Every breakout does not necessarily result in a huge gap up like that. But with a stock like AMD, you can get some advance warning. So if you had taken a position right there on that breakout, then it would have been before the big rally, before the gap up. The other one was Oracle. Oracle right here. Oracle would have hit the scan right here 2 days before the breakout. It was not in a squeeze. You can see momentum was starting to move higher. So right here, it would have hit the scan. Would have hit the scan again on this day, the second day. But right there, you can see momentum is starting to move higher, and you can see the ADX line, the green cross the red right there. These are very subtle things, but they can certainly tell you when a breakout is about to occur. Let's go back to AMD and look at the squeeze on that one. There's AMD again, so it would have hit the scan right, probably right here the first time. That one is in a squeeze, and you can see the momentum is now above zero up here. So that was telling you it's in a squeeze, momentum is above zero, something is going on with AMD. So it did give you advance warning about 3 or 4 days before the gap up. So these are the kinds of things to watch. Now, how can I find those? It's great to see it in retrospect after it's happened. Of course, if you follow specific stocks, like if you have been following AMD for a while, you kind of know the personality. You know that when it went into this long rounded base right here, it probably was winding up. That's actually what creates the squeeze. It's actually winding up for a move, and AMD had been moving up, so the move is probably going to be up. You don't know it's going to be this big of a move, of course, but if you're watching specific stocks all the time, then that will give you an advance warning. Oracle, same thing. Oracle had been moving up, been doing really well. Pull back, very nice orderly pullback on low volume. You can see that the momentum started to increase, and then it took off. All right, let's see, how do we find these? The first thing that you have to do is, let me close some of this. The first thing that you need to do is have a watch list of strong stocks that you follow. And you can create your own. It could just be a watch list of 10 stocks if you want, like the Magnificent Seven. You could just use these and just watch those. You could use the ones on this list. Oracle's not on here, but I think I may add it. Neither is AMD, so I may add both of those. But Palantir is. So you could just go through these each day and click on the plus sign and just look at the charts. You could do it that way. Just look to see where, now in this case, it pulls back. Google pulls back to the 21, but never went below it. So it wouldn't actually hit a scan in this case. This one right here would. It would have hit the scan there. But the other ones just pull back. So you can just watch this, just look at the chart every day. Notice it's at the 21 again. It's got a red bar, so you want to wait for a green bar. But another way to do it is, number one, get a watch list of strong stocks. Now, there's a couple of ways you can do that if you're a subscriber. On the chart lists and scans page, there are 2 excellent chart lists. One is relative outperformers. These are, and it tells you what it is right here. These are stocks that have outperformed their own industry group by 10% or more, and they've outperformed the S&P by 7% or more. They have to satisfy both of those criteria. And that's how they make this list. This is updated every week. This is a CSV file that you can download into any other platform. So you can use this as your watch list if you want, relative outperformers. You notice there's 371 stocks in this. Last week, there were 379. Short squeeze list, of course, is on here. That's updated every week as well. The other one, the one that I like to use, is the momentum watch list. This has a few more on it. This gives you all the criteria for the momentum list. 398 stocks this week. There were 384 last week. And if you just want the top 50, you can get those there. The other really good list to use is on the charts page. And down here, every week I go through and produce the top 10. These are the top 10 of those relative outperformers. And the asterisk tells you if they're brand new for the week. These are the ones that have had 52-week highs, but they're under $50. So if you're looking for lower price stocks, this is a great list. And these are the IBD 50, the Investors Business Daily 50 stocks over here. And then what I do, and also we've got the top 10 in large cap, mid cap, and small caps. And what I do every week is I combine all of these on an ongoing basis, so week after week, because many times when they hit this, they are already at their peak. You notice the color coding if they're in multiple lists. If it's green, they're on all 3 lists. This shows you the ones that were removed. So these are really good ones to watch as well, because they had been moving up, but just one other one just took its place. So they could be, number 11, 12, 13, and 14. But when they hit the top 10, they might be already at their peak. So what I did was I start accumulating these over time, the ones that have been in this top 10, and then I put some criteria against it to weed out the ones that have actually just collapsed, which sometimes can happen, but not very often actually on these top 10s. And I update this every week as well. It's a CSV file. You can download it into your own platform. This week there are 295 of those. Last week there were 292. So that's another one. You can use any one of those 3 or all 3 or a combination. So let me now show you the scan that I have created, and I'll show you how to use this on all of those lists. So here's the scan. This is in stock charts. I'm going to go through this so you can rewind and create it yourself in your own stock charts if you want to. But this is what it looks like. Country is US, and it's very easy to create these. You can use this little cheat sheet down here. So ticker properties right here, you can say country, click on country, and it says country is US. I want to close above 20. I want the 21-day moving average of volume to be above 100,000. So I want over the last 21 days, the volume needs to be over 100,000. I want the close to be higher than the open. So I don't want a stock that goes up and then pulls back that day. I want something that's still higher than the open. Here's the key lines. The close is above the 21-day moving average, the EMA moving average, and yesterday's low was below the 21-day moving average. So think about that for a second. It's gone above the 21, but there could be a lot of stocks that are above their 21. I don't want the ones that are just up there, or maybe the ones that are actually too far away from their 21 getting ready to reverse. I want the ones that have just crossed. So, so this is a way to do this by looking at yesterday's low as well. And down here are the watch lists. I've got a variety of them, but here's the ones that I just showed you. I'm going to show you what results I get from each of those. In this case, I want ones that are optionable because that means they probably have lots of liquidity, but you can put 2 slashes in front of that and remove that if you want all stocks, not just the ones that have options. And then the next thing is I want a green bar today, and yesterday I do not want a green bar. So yesterday should be blue or red, but today should be green, and it's above the 21. So this is the way to find good stocks that are getting ready to break out. Let's see what we get. Let's start with my favorite, the momentum watch list. We'll run this and see what we get. Remember, there are 300 and something stocks, 398 stocks in this list. I've got 11, only 11 on the list today. There's Costco. So another person asked, what do you think about Costco? Well, it's on the list today. So today might be a good entry point. If we look at the Costco, there it is, just above the 21, starting to move higher. If we look at it on a longer term basis, right there, it has, yes, been in a downtrend. So if you draw the downtrend line, just to get a sense for what it needs to get over, it would be pretty much like this. So there's the downtrend line, which is pretty much right at the 50-day moving average. So above the 50-day right here, and certainly above the 200-day, that's where there'll be lots of buy orders sitting there. Also, shorts will probably start to cover there as well. But right now, it looks like it's starting to make a move. You can see the green bar. So that was part of the criteria. It needs to have a green bar in addition to being above the 21. So Costco might be just getting ready to make a move right now. So that's my my analysis of Costco. Also it's got a solid support line down here as well. Let's put a horizontal line in right down about here. So you see 890 is a solid support line. It looks like it's already created pretty good support right there, just above 900, about 905. So it looks now like it is definitely ready to be moving up. All right, so that one looks pretty good from my list. Let's see what else we have on the list. So one thing you can do is you can take this list. I can then move it to what I do is save it to a chart list. I save it to, I want to replace, and I have a list that I dump things into. So anytime I run a scan, I just dump them in here, and that's when I can massage the data. So I'm replacing my scan dump list. So here's all the stocks now. And when I click on the first one, it will give me my default chart. You can see that one's in a long squeeze. So this one might be ready, but it's gone above the 21 a number of times. So you don't know when this one might actually fire to the upside. You can also, I want to look at this a little bit differently, and I want to see what the bar looks like, green bar. You can see it's had a green bar a number of times before. So it's hit that's what I mean by every scan is not equal. This one may take a long time to actually fire. But what I want to do is use this particular view on all of them. So I go down here and I say apply chart list to all. I want to ignore the chart period, ignore the period itself, and then update the charts. So now what that's done is it's now updated all of the charts in my scan dump, which is all the ones that my scan produced. And now I can just click through and look at every one, and very quickly I can identify potential movers. There's one in a squeeze, sideways pattern. There's the green bar. It's above the 21. Yesterday's low was below the 21. It's got a nice candle right there. This one might be ready to go. It's a biotech stock, so you always have to take that into consideration as well. Next one is Chewy. Chewy has been in a downtrend. Momentum is starting to pick up. It had a little bit of a squeeze right there. Chewy might be one, but I mean, it's not. So far, I haven't seen anything that jumps out at me. There's Costco. We talked about Costco. Costco looks really good right now. It's a good entry point for Costco. Front line looks interesting as well. You can see it's had a nice run up, nice orderly pullback, low volume. It does have even though it's green, technically it's green, it's in a squeeze, but it has a shooting star. So I would not jump into this one. I'd wait for the end of the day to see what that candle looks like at the end of the day. Next is also a pharmaceutical company in a squeeze. This one looks like it's just getting ready to break out. Nice, orderly, rounded base, big, huge run up, nice rally from the beginning of August. This one here looks pretty interesting as well. This has been on the top 10 list in addition. All right, next one is MP Materials. This has been in a long basing pattern, just getting a squeeze, but actually it moved up and down too much to stay in a squeeze, but it looks like it's kind of been in a squeeze for a while. So this one, I think when it gets above 80 or 85, then this one might fire. Now, one thing you can do is take these and put them in another watch list and just keep an eye on them. Or you can just run this every day and see which ones look good. There's Oracle. What do you know? Oracle has a green bar. It's above the 21. Yesterday's low was below the 21. It's in a short squeeze. Momentum is starting to pick up. This right here might be a time to take a position in Oracle. Will it have this kind of breakout again? Not likely, unless there's huge news, but it could certainly move up back to the top of the range. So Oracle is on the list today. Pod, again, starting to move higher. That one might be interesting. Medical equipment category. Solar Edge, this one actually has been in a nice orderly uptrend. Keeps pulling back, basing at the 21, goes up, pulls back to the 21, and it just did it again. So it's just getting ready to move higher. It's got a nice candle down here, green bar today. It's at the high of its range. Momentum is starting to move up. So this one right here, Solar Edge, might be a good entry point. SMR, NuScale Power. This is industrial machinery, but it is a power equipment company. This one is, I'm not too impressed with this one, just kind of a sideways choppy pattern right now. So I would probably pass on that. And then we're back to the beginning. All right, so let's take a look at the other ones. So I just showed you one way that you can identify potential stocks. It doesn't mean they are going to break out like that, but it is a way to find them early. So let's cancel that one, and let's take a look at the top 10 combined list and see what we get from that one. I'm not going to go through each one like I just did. I'm just going to show you the list. So in this case, there's only 6. Every single one of those are the same as my momentum list. That's why I like the momentum list, because they usually give me pretty much the same stocks, but in this case, it narrows it down even more. All right, so that's what those look like. Let's take a look at, let's cancel that line and look at the relative outperformers. This one should be interesting. Remember, relative outperformers, let's see how many stocks there were. Chart list and scans page. There were 371 stocks on there this week. So let's see what we get. 5. The only new one is this one right here. This is the only one that is not on the other 2 lists. So there you can see a big gap up right there, sideways movement. It's been consolidating. Just today is above, but it's pulling back right now. So it is in a squeeze. So this is one that I would want to wait, and probably wait to see if it can break out of this Darvas box, basically. Hopefully by now everyone knows what a Darvas box is. If you don't, go read Darvas's book. You can get it on my website. Let's make it like this. So there's a Darvas box. Darvas was a ballroom dancer back in the 50s and taught himself how to trade stocks and turned $2,500 into $2 million in 18 months. There's a Darvas box. What he would do, he would look for strong stocks, breaking out with volume, and then he would notice that they would consolidate over time. And when it breaks out of the top of the box, that would be the buy point. So that would be the buy point on that one. All right, let's look at the last one, which should be interesting because the last one is short squeeze stocks. So you can see those 3 right there returned roughly the same stocks, but the momentum one returned the most. That's the screen that I typically use the most. And I've created scans like this in Thinkorswim. I might show that on Saturday for subscribers. I'll show you how I've set up my Thinkorswim for doing scans, and also what my charts look like over there. So we might probably going to cover that on Saturday. But let's take a look at the short squeeze just for fun and see what we get. All right, so these are the short squeeze stocks. Solar Edge is one that was on and SMR. These 2 are on the other list as well. So that is a really good example of not only stocks that have that are in very strong groups. However, they also have more than 20% of their float short. So those might be really good, especially since they made both lists today. And there's a way I can see something that looks at all the lists. Let's look at end phase right there above the 21. It's below the 200 though. So, this one really needs to prove itself in order to make any sense. But if I wanted to look at stocks that were in all of these lists. And we did see some that were in all lists. So now I've got all of these lists, and since I'm putting and, I'm not using or, which you can say, you can look at two full lists and see what's in both of them. Or in this case, I want to see something that is in all of them. All right, so it's in all 4 of these lists. Let's see what we get. Nothing. So in that case, the overlap didn't really, I think it might be or that I need. Or, yeah, it's or. Now, the one thing you have to remember with or is you need to put brackets around what you want it to be looking at. So I want it to be looking at this whole group. And now let's see if it's in any one of these. There's 16 stocks now in all the lists right there. All right, so that's the way to do it. That's one way to find those stocks. Somebody asked, is there a way to find something before it breaks out? They are not all equal. You have to look at them, decide if it's a good stock or not. If it's one that is in the top stocks that you're hearing all the time, then it probably is a good potential opportunity. All right, thanks for watching, everyone. Let's see what we're doing. Looks like we're continuing to go down. So after a little bit of a rally, the market is starting to head lower now. So let's see how it ends the day. Good luck. Stay safe, and let me know if you have any questions, comments. Please like and subscribe, and I'll talk to you tomorrow. Take care.